Perfect. Thank you very much for the kind introduction and welcome to the panel on transforming finance with digital funds and digital securities. Maybe setting the scene quickly. The next generation for markets, the next generation of securities will be tokenization of securities. This bullish quote was given by Larry Fink, CEO of BlackRock, at the end of last year. But the question we want to discuss and cover today in our panel discussion is how specifically the future of capital markets will look like, and also what specific role tokenized securities and digital funds actually will play, and what can be a road towards mass adoption in traditional capital markets. So I'm very pleased to have a high-ranked panel of experts discussing those questions today. And I would please ask yourself to introduce you quickly with the name, company, and function and topic, and then we dive into the topic next. Maybe from left to right.
So starting with me, thanks. Okay, so I'm Jonathan Lessman. I'm CMO and Head of Platform Strategy at Swired. And Swired is a software company developing DLT-based software for regulated financial entities to create a blockchain network that is an open innovation platform for the financial industry to settle securities, etc., and all kind of digital assets.
Benjamin Duva, I work for BNY Mellon, part of the digital assets business, look at tokenization. And who doesn't know, BNY Mellon is the largest custodian in the world with 44 trillion of assets under custody, and about 20% of investable assets touch BNY Mellon every day.
Hello everyone, Maha Sadi. I work for Bankhaus Tradias as a Director of Compliance and Regulatory Affairs. Tradias Bankhaus are known to be one of the biggest regulated OTC traders for cryptocurrencies, and what makes us unique is the fact that we provide market making and liquidity provision, and we are also very well known to the state of Hessen and other prosecutors where we keep crypto safe and we help whitelist tainted cryptocurrencies.
Yeah, my name is Kurt Seimers. I'm working for BNP Paribas, one of the largest banks in Europe, and I'm responsible for the product management and product development for the client segment asset managers in Germany. And I'm also part of a global digital asset team exploring different use cases on tokenization of assets, custody of digital securities, distribution of tokenized fund shares, and CBDC.
Andreas Sack from DK Bank Deutsche Girozentrale. At DK, I'm responsible for some DLT and digital asset projects, for example, digital assets custody and the pilot regime at the moment. And we start working with this some years before.
Simon?
I'll finish up. Yeah, thank you, Jens. So Simon, I'm working as Head of Digital Assets at Hauck Aufhäuser Lampe, which is a mid-sized German private bank. Been previously with Deutsche Börse, where I was also working together with Maha here on the panel, happily. And before that with Commerzbank, where I used to work with Ben. So very much looking forward to the discussion.
Perfect. Thank you very much to all of you. And Simon, I can tell you, you are huge on the screen for everybody in the room.
Off us. Towering off us.
All right, then I would like to structure the discussion today along 3 dimensions. We want to talk about digital securities and digital funds in the dimension of business model, as well as technology and regulatory topics that arise around those, around digital securities. But maybe before we dive into the open discussion, I would like to set the scene together with you guys a little bit, that we kind of have a level playing field within the entire audience. And obviously, regulation plays a vital role in the adoption of digital securities and digital funds, especially within the traditional financial industry. And Ma, maybe you can give us a bit of a status quo update on what is happening on the regulatory side. We know the DLT pilot regime turned effective last week. We know that the Electronic Securities Act in Germany is in is effective since June 2021, but are we now kind of ready to go for mass adoption with digital securities on the regulatory end, or do you still see topics that need to be covered that are still blank spaces?
That's a very excellent question, and I think it's a very difficult one to answer. We do have regulatory clarity around the E-Securities Act in Germany, where we know that dematerialization of securities is possible. The pilot regime entered into force on the 23rd of March, which would enable us to have bonds, shares, and UCITS available on DLT. That's all excellent. We also have the Blockchain Act in Luxembourg that had its third reiteration. Amazing. However, there are still some tricky points that needs to be addressed. We have covered the AML aspect, we have covered the custody aspect, but there are some nitty-gritty around the details around, let's say, interoperability, cash settlements, thresholds that might still be questioned for mass adoption, and on a German level, how are we going to deal with dematerialization of shares going forward? One thing that a lot of people tend to forget is that CSDR requires us to have dematerialization of securities of new issuances as of January 2023, but all new issuances and old issuances have to be dematerialized in a certain form as of January 2025. So are we there yet? Do we have all the components? I think we are on a good track, but the industry has to be a bit more open on its pain points and where it wants to go forward.
Thank you very much. After covering the regulatory perspective briefly, I think it's also important to take a client perspective, right? Simon, maybe you can share some insights from your recent placement of a 60 million digitalized bond for Siemens AG, and also what have been the learnings around that placement. I think it was quite heavily covered in the German news, especially as it was done on a fully public infrastructure and being technically done on the Polygon blockchain. But maybe your insights from that placement.
Many thanks, Jens. So I think personally that we were really delighted and honored also to say that a large German corporation trusted a public blockchain and also trusted us as a registrar to do this issuance. And this was a signal to the market, in my opinion, at first. So we have now afterwards really seen that a lot of people are shifting their minds. And this is, for me, the greatest thing about the transaction, that we see a larger openness to public chains and also securities on public chains due to leading by example, which is always what we are trying to do. We will not be the largest in the long run. We are trying to lead by example. And I think from a business perspective, what was the conclusion, and we already see that for years now, is that we also need the money in some way on the chain. So we need a kind of digital euro. This will not be a central bank euro. This is what we also see. And I think it was kind of interesting that even the treasurer of Siemens AG in his public press statement basically said, guys, we need the digital euro to proceed. And we see this as a kind of a step forward that we also have to tackle. I mean, this is more a point maybe for Friday than for today. But definitely the effects and the efficiencies that we're waiting for will only come to an end if we also provide a payment mechanism on the same infrastructure. And this means within this transaction that we are talking about the same public chain. So we need public chain-based digital payment mechanisms to enable efficiencies. This is not a new thing. I mean, this was basically our conclusion back in 2019 when we did a similar transaction with Siemens and Continental. But we still see that this is the pain point. And so the German Act on Electronic Securities, the EBPG in German, is a great thing. But if you don't put the money on the same infrastructure, it will not lead to the benefits and efficiencies that we are expecting.
Thank you very much, Simon. I think, always keeping in mind that many building blocks have to come together to complete the puzzle of a vital capital market ecosystem that really allows us to generate the benefits of digital issuance and also the management of digital securities over the entire life cycle is really something where we are probably on a good way, but still not there yet, right? But obviously, when we talk about new forms of issuance, we also talk about new capital market infrastructure and new technology underlying such issuances. Maybe Jonathan, you from the Swired perspective can shed some light on what is happening on the technological end. I mean, we have now heard that Siemens placement has been done on Polygon. We see some, let's say, tendency towards EVM-compatible infrastructures. What is your belief? Will the next generation of capital market infrastructure be one that relies on public infrastructures that are EVM or Ethereum-based?
Well, at Swired, when we started, right, when we were still at DekaBank, an internal project, we actually started on Auth3 And then when we founded Swired as an independent company, we consciously took the decision to switch to EVM. So, of course, we think that EVM is the ecosystem to be in for the future, and that there is going to be the mass, right? So mass adoption will require kind of a similar understanding of the codes and language that we're using, and that's why we believe in EVM in this point. But on the question public or private, I would rather say the question, what it's going to be in the end is it's going to be permissioned from our point of view. Permissioned in some way that you permission the access, right? The writing rights in that point. We have seen as well that even though if you're in the public environment, not everything is shared publicly, right? And in that sense, we know from an architectural point of view, when we model that environment, that financial holistic infrastructure that we want to provide as a software company, that we have to build the software in such a way that we can differentiate between data that we are going to share publicly and data that has to be kept private on a need-to-know basis, which kind of makes sense in a financial ecosystem. And on that point as well, on the payment side, we have realized as well that it's a pain point, which is actually why we released a white paper in the last year called Cycross, which might help us to enable payments and a DVP-like format on-chain as well in the EVM-based environment.
Great. I think trying to take like a short summary, we see some good development on the regulatory framework for digital securities. We see that there's actually, clear commitment by large corporates and large issuers as well as large investors moving into the space. We see some convergence on the technology side towards EVM infrastructures without making any, final, I would be careful making any final judgments here on the technology side. I think also important your point to separate technology and public-private, right? I mean, those two things, you can easily have a permissioned infrastructure that is EVM-based, right? And I think this point is important to mention. So maybe Kurt, taking all of that together, you from a perspective of a large global custodian and asset servicer, it gives the feeling that everything is kind of right and ready, or at least on a good way for mass adoption in digital securities and digital funds. You as an institution also have done large placements together with the EIB recently. What is your perspective also, not just only focusing on Germany maybe, but also taking the broader European and global perspective here?
Yeah, from my perspective, I think we are still in the early days. So we see a lot of experimentation, but not proof of concepts anymore, but live experimentations. So we can see on the investment banking side that large investment banks are developing their tokenization platforms. We have seen Goldman Sachs, but also BNP Paribas has issued last summer the first digital bond together with Électricité de France, a French company, on our Asset Foundry platform. We can see on the asset manager side that the asset managers are starting now as well to explore how they can invest into digital assets. So there was the European Investment Bank bond, which has been issued under Luxembourgish law, and it was a fund where we were the custodian and the depositary of AXA Investment Management, who has invested into this European investment bond next to Union Investment. And then on the custody side, or on the custodian and service provider landscape, we see that custodians are looking for solutions, how they can manage the private keys safely, how they can integrate this solution into the legacy platforms, because we will see traditional assets and digital assets parallel run. And then we have the topic of the cash lag. I fully agree with Simon, who has the view that, as well as we have, that we need to have a kind of commercial bank digital currency or a central bank digital currency. We have seen that the Banque de France and the Central Bank of Luxembourg has issued a CBDC so that European Investment Bank could settle, or the token could be settled on the same day. So this is an absolutely must-have. And then, from my perspective, we need to have a further harmonization of the MiFID II regulations, how they are transposed in the different countries, because this is a major blocking point so far, because we have local laws which are regulating then local aspects of custody and asset servicing without necessarily taking into account the MiFID II dimension. As Maha has mentioned, we have now a DLT financial instrument definition in the MiFID II regulation since last week, but we don't see yet how this has been transposed into local law with regards to custody aspects or asset servicing aspects, and this is needed to have a wider adoption throughout Europe.
Yeah, I think extremely important point, right? Since last week, the MiFID definition of a financial instruments includes that it can be issued and being reflected on a distributed ledger infrastructure. So that's kind of also groundbreaking, but I'm totally with you, it has to be translated into national law, right? Maybe you also mentioned the point of custodians more and more moving into safekeeping of digital assets. Andreas, you at DK Bank are currently, or you recently announced setting up a custody solution for digital assets and a key management system, I guess together with Metaco. You are preliminary registered or preliminary licensed crypto register. You did issuances. It seems like you definitively left proof of concept phase behind you, building up real infrastructure. How's that going at DK Bank? And maybe you can give a bit of some war stories on how you're building up the digital services at DK Bank at the moment.
Okay, thank you, Jens. First of all, we start with a very tiny proof of concept. I think that was the time Jonathan was a DK employee, and that's Wyatt, and we start with the infrastructure on Corda R3. In this time, I think there was a lot of very tiny group regarding what we are doing, what we want to do there. But right now, as Jens said, we leave the proof of concept phase, we start implementing everything, and right now we have an additional task. Because you have the organization, you have the DK Bank with 4,000 people, and not everybody there, I think only 2 or 3 handful, are digital asset natives. And you have, right now, you have to educate, and you have to make clear that you are on a journey, and the journey is, change or have the potential to change the capital market infrastructure completely, the ecosystem. And the organization have to understand this. the organization have to understand what is the part of digital assets right now, and in addition to Simon and Kurt, what is the benefit if we have cash on chain regarding the processes, regarding the old and very large legacy systems in our house. What are the advantages in this case? And that is very difficult, I think. It's necessary to start educational programs because only with this tiny group we have with responsible for digital assets right now, we do not finalize this. We need the whole company, or we need a lot of the whole company to realize what our aims, or to finalize our aims.
Yeah, I think really this shift from proof of concept and having a small group of believers to let's mobilize an entire organization, can be a really exciting change process. I think, Ben, you at BNY having a global digital asset strategy, having done some huge announcements in October, I guess, last year, launching your own crypto custody solution in the US. You have done some huge announcements in February this year. Maybe you can share a bit of the BNY perspective on digital securities and also the potentials you see in tokenization for you as a global custodian and one of the critical players in the global international financial market infrastructure.
Well, happy to address that. First, I think we talked about maturity before, just seeing the audience, the people you meet here coming from years ago. I think our clients and peers are now here as well, right? So that's a good sign that there's a maturing of the industry, and I think everybody has seen it, and also the discussions we're having lead into a different direction. I think, Simon, right, we do this for so many years. Now I think there's a true change in tone and in seriousness around the topic, and if you see who's in that field now, I think that really shows that there is something coming and going on. And to underline that, maybe to give a little view where we come from as BNY Mellon. We had a digital asset unit. We started that a while ago. Partnering with the different businesses to develop and look into new solutions and opportunities. Then in October, as you mentioned, we started our digital assets platform with the cornerstone, the foundational piece, digital assets custody. And now in February, we go the next step, and we have announced that we form a digital asset business, meaning digital assets is like any other business in the bank, and we use this opportunity to form a unified strategy for the bank and to build a platform to service the needs of our clients in that field, also taking always a good look at the regulatory landscape there as well. And I think the important piece for us is that it's not that different, it's not that separate. We try to service our clients and the requirements of our clients in both areas, traditional and digital, and that's one of the big questions our clients have. And if we look at our clients and the feedback we're getting, in 2022 we had a client survey, and we found out that 91% of our institutional investors are interested to invest in tokenized assets, right? So that's not a small number, and if you assume the size and the kind of clients we have, that's quite a significant shift probably from a few years back. If we then dive a little bit deeper into the discussions, one of the topics that keeps to reoccurring is the interest in private assets, right? I think that's a topic we see more and more these days, right? Or that's of course something we're looking at, right? And we try to research, but to find out what are the actual pain points of the clients. Is it secondary market? Is it liquidity? Is it other topics? And then try to solution and service those clients' requirements and build our tokenization and platform around those. I think that's always important. I think we did that too long to discuss for the sake of discussing, and then we have a technical discussion nobody minds, but it doesn't solve the client need and requirement. The client need and requirements are true requirements they have today and will have in the future. And it's, I think, up to us to make that happen a little bit, right? It's not, I think that has changed a lot in the last years.
Yeah, great. I think I fully agree. It's really good we have some treasurers here and we have some investors and asset managers also joining the discussion, that it's not just only here the geeks building the infrastructure and the products are here, but also the people investing into it and the actual issuer side, right? And 91% of all investors in your survey being interested, I think is a strong signal also towards the market. But maybe opening the discussion here a bit on the business model and customer side. How do we, I mean, in your perspective and open question to the round, how do we have to imagine a digital asset capital market ecosystem? Will it be the same roles as we see today? Will the role of investors shift? Will the role of issuers shift, of providers? What do you see? Where do you also see value chains might being newly distributed? Are there any ideas in the room of how this future capital market will look like? I think it will not just be the same as it is today and digitalized, right?
Well, maybe then I just pick this up, since we're trying to build a holistic financial market infrastructure based on DLT. What we are seeing, or the strategic challenge that we are seeing, is that potentially the value chain could be totally reorganized, and we expect that those actors that currently have a customer interface have the best position to be very well positioned in the new market environment, right? From our perspective, the needs of the customer are still the same: interested into good investments and into a good yield. That won't change because we're changing the infrastructure. So we believe that there will be the value chain might get shorter, and we think so because we are building a joint ecosystem where we certainly have a joint environment that we're using to monitor, to create data, and to do processes together. And that's a huge difference to the past, where everyone had its own island and was not integrating and working with someone else. But the current challenge that we still see is the interoperability aspect that we're still lacking. So we see that there are many different applications out there that are not synced, right? I can't use one application to issue something and then reuse it in a different case. And that's exactly what we think is still the current challenge, and which will as well shape the future value ecosystem we will have in that regard.
I think now it works. I think the important thing is that, and I think you pointed out, there's no real shift yet. When we look at our clients, they look to us to help them navigate through those changes and then evolve with them and ultimately change capital markets infrastructure. And I think that's one of the feedbacks we are receiving quite a bit and quite a lot, and that's why we so heavily go into that area and do that. We call it measured innovation, right? I think in a way we innovate continuously like we always have done. And just putting your weight and your investment into that new digital assets fields is part of an innovation journey. We as a bank have been doing, I'm always wrong, 238 years, I think now. So I think that's an important key point. Clients come to their current partners to help them navigate the area. And I think it's a continuous innovation journey.
I think from a fund perspective, we might see some changes in the way how funds are distributed throughout the world. As you might know, Luxembourg and Ireland are really the leading providers of UCITS funds, which are distributed on a worldwide scale in Asia and so on. So the UCITS brand of a Luxembourgish fund and Irish fund is really recognized in Asia. And German funds are only distributed in Germany. So why is that? I believe because it's linked to the way how German funds are settled or subscribed and how Luxembourgish and Irish funds are subscribed. So in Luxembourg and Ireland, we have a register. So it's a transfer agent who has the role of a register. So an Asian client can easily buy a Luxembourgish fund because he just needs to be included in a register held in Luxembourg at a TA. We have many fund distribution platforms who have registers or who have a register at the TA and who are helping then distributing those funds. And in Germany, it's not yet the case. But with the new Electronic Securities Act, there might be the possibility to tokenize those fund shares and to hold those fund shares into a register. So the depositary of the fund has the role to be the registrar, or he can appoint a third party. But there we might see maybe a shift to another distribution model of how German funds can maybe distribute it to even foreign investors in the future, so that German asset managers don't need necessarily to go to Luxembourg or Ireland to set up their funds to distribute them on a European scale or worldwide scale.
I would pick that up maybe if possible, because I think that's quite an interesting example that Kurt gave. And we saw this actually internally because we have this preliminary license to issue crypto securities and crypto fund shares. And we also have a Luxembourg entity, which is basically doing the most of the fund settlement. So we know the Luxembourg side as well and the German side. And we had actually the issues that for the German market, it's not the common way how German funds are being administered to some extent, as Kurt has explained. So this really opens up a regulatory possibility for Germany in terms of competition between different jurisdictions. And we have seen that before. The German Act on Electronic Securities has enabled Germany to be competitive again in the issuance market, because other jurisdictions already had the dematerialized security. So Luxembourg, France, UK, Ireland, all already had the dematerialized security. Now Germany has the dematerialized security as well, but even additionally, it has the crypto security. And so I would similarly say here for the fund industry, Germany will become, that's my hypothesis, a more relevant issuance place, basically for fund shares, because it's possible not only to have the dematerialized fund share, but even the crypto fund share within registrars that can be managed internationally as well. And fun fact, we already had interest from international investors with regards to our crypto securities, where we had to say, guys, the thing is already placed. We don't have a chance now to resell it. We have to issue another one, maybe with somebody who wants to issue something. But with regards to crypto fund shares, I mean, you just say you want something else. Okay, we just issue another fund share then for you. Yeah.
I think there are two buckets, right? So it's one is efficiency, right? More efficient and better operating models. That's the one side. And I think the other side is reach, distribution. Depending on the asset class, there's liquidity, right? I think that's, if you talk about private assets, for example, that could be one of the topics of relevance. And I think those are two components that drive these changes. Because, I mean, if we go into all these details, if you're not into it in the audience, you might not pick up that's what you guys are actually talking about, right? So that's the two key factors. And I think the legal and technical environment enables, and hopefully we find solutions and will find solutions for both. But that's the main drivers we currently see.
If I may add, I do not think it's an either-or discussion. It's maybe a less and more. So the more that we go along, it will be more towards digitization. But I feel like both will have to coexist, at least for the long term, so for the next 3 to 5 years, while we embrace that journey of pure digitization of funds and securities. one of the questions that you asked and we did not touch upon is the change in roles. I believe that traditional players will still have a role to play, a very primary one, given the fact that they're experienced, they have distribution channels that is needed, and they have the liquidity. That is also one of the points that was touched upon earlier. But we should not underestimate the way that this regulation and the upcoming regulations will open up the sphere for other participants, specifically when it comes to the tokenization of real assets going forward.
From my perspective, there's something I want to add, because we talk about the coexistence of both worlds, the digital and the digital assets and the traditional assets. And from my point of view and what we are talking with clients, they are not interested. What is the issuance process? Is it a digital asset or is it a traditional asset? They want a seamless integration. And that's what's the challenge for us, to integrate and to mass adopt the digital asset issuance process, for example, in the standard client process. They want to invest in products and they are not interested in, hey, that's a rocket science, what you're doing, that's a standard product, it's a fund, it's something else. And that is something what needs some time, I think. We have to combine the new world with the existing world, because the client do not see the difference between the both issuance processes.
You want more attractive investment opportunities for your clients, right? And I think the customization components, all these that can come in with the technology is another driver, right? I think those are drivers behind that change.
Yeah, we are talking about custody, crypto custody, and so on. If you are looking for crypto custody for digital assets, not coins and something like this, the client is not interested in how it works. They only want to invest, and we have to do the work for him.
Yeah, I mean, I think we probably talk about mass adoption if we do not talk about the underlying infrastructure anymore and the form of issuance, right? But I think really, Ben, your point mentioning that ultimately it's about efficiency, and especially in middle and back office processes over the lifetime of an issuance, and the reach and the distribution potentials that come with new forms of issuance is probably the two that we really should focus on.
Without losing the liquidity pool, right? I mean, that's always the key one, right? That's where I think, and Simon, you might have had that experience, like many others have, like that loss of the liquidity pool for certain buy and hold assets might not be the same issue as for others. But even if you have a buy and hold long-term invested assets, you want to be able to trade out of that asset, right? And that's where the difficulty starts. Liquidity is the key.
I'm with you, Ben. So I think the issue here is definitely it depends highly on the product. So there are some products that will never work if there's no liquidity. For example, something like an ETF. Yeah, it's impossible to do it on the blockchain. Yeah, if you do not have access to liquidity pools as is. For others, like the stepped instruments, I think it's okay-ish. And then there are some instruments that currently have literally no access to liquidity pools. For them, it's perfect to have the ability to access liquidity pools that weren't there before yet.
Private assets is that example, right? That's what we hear from our clients.
Yes.
That's why the technology might have different starting points for mass adoption than we might have thought a few years ago, right? I think that's important to keep in mind.
Yeah, I think I get some really bad views from the guys organizing the conference. I think we have come to an end now, but can I take away the key message also that we will most likely see adoption in the private asset space at first, and then we will more move into public assets? Agreement here in the panel?
Well, we see both, right? But it depends then within public which ones, right? I think that's always the interesting piece. A bond probably is earlier than an equity.
And in the end, it depends all from regulation. If we don't have a pilot regime where we can have an MTF, where we can list digital assets, it will not help. So we will always stay in the OTC markets or private markets. So to have a public market, we need to have regulation. And the regulation is now with the pilot regime, it's just the sandbox for 3 years, then it will be reviewed for another 3 years. So it will be a 6 years time frame. And so far, honestly, I don't see many players who are positioning themselves as in DLT MTF or DLT TSS yet. Maybe it will come, but
yeah.
But there are regulated roles, right? So
Yeah.
there are regulated roles where today you can issue publicly traded digital securities. I mean, just
I was
difficult for you as a bank, right? But there are others who could do it.
Yeah.
I mean, it's very important.
I was
to
now
keep that in mind.
accidentally opening a new discussion that would fill probably an entire panel, but I'm fully with you. I mean, pilot regime is just active since last week, so time will show who will move into this new opportunity of providing DLT MTF solutions, right? But thank you so much to all of you for this fruitful discussion, and yeah. I hope to rejoin next year to kind of see where we are down the path on mass adoption of digital securities and digital funds. Thank you very much for your attention. And yeah, maybe last comment from my side, we have implemented a test smart fund on Polygon blockchain and provide a little demo during the lunch break. So whoever is interested in that, just register through a link that hopefully will show up in a minute. And yeah, thank you very much to all of you for your attention and